Welcome to TradeTheNBA.com. This is John. This report is for the 18th of October. Well, at least I've got some charts back up. I've been having a terrible time with my TS promulgating some of the lower range charts. But from our daily standpoint, you can see that when we had that dip day, we had the magenta crossing over and still had yellow underneath magenta as well as white. So those were still bullish configurations. We were kind of stuck in this orange between cyan and red zone, but we can see that that started to dip really at the beginning of yesterday. And nice crossover carry through. The question will be now whether or not green will cross above cyan. That becomes a critical point when that gets reached. Don't know if it'll happen today or at the beginning of tomorrow, but intraday we're going to see any pivots within that. We're above the 23%, makes it very easy because the 23% now becomes your fail safe. So that's right at 3,703 quarters. Um, Below that, obviously, again, I would expect weakness. And again, we're just going to be looking for any pivot. Magenta coming back down would signal the end of positive run. We can already see that we're peaking out here with short-term buyers in the steel being up as high as this is, but it's a nice P2 configuration, so it could have a little bit more oomph. The reality is everyone is still betting on a Fed pivot, and for the most part, when you have these kind of down moves and that, you get so many traders to one side of the trade that it makes an easy turnaround. And there's always bulls out there, just like there's always bears looking for those imbalances that they can take advantage of. And your lockups for buybacks and that ended in this is that range between 34.50 36.50 that everyone thinks that is relatively the Fed put, but I think that's a little bit subjective. It really is going to be both an interesting macro and micro situation where we have this imbalance, within the U.S. of region by region performing better or worse than others, and then the global situation, which is really in a dollar squeeze. And we've been seeing the Fed having to take care of that dollar squeeze significantly. Um, Take place because you're seeing the Fed sending money to places like Switzerland and things like that, where people are having dollar margin situations. Because again, energy needs and things like that all have to be bought in U.S. dollars, and it's a real drain on the rest of the world having to come up with this extra cash for the inflated oil prices, and really causes a significant situation from a credit supply standpoint. So, whether the Fed will continue to do that kind of easing, I think that it's kind of a critical one because I think you're seeing central banks, even Bank of England, had already started it to support uh, their treasuries and that. And of course, that created quite a stir. And obviously, you've seen the political upheaval of paying attention to that side of the aisle because it has an impact. China just decided to not release any economic data. First time a major economy would just like decline to share information at all. So we're seeing that relative. Now, when we look at the NASDAQ, big difference here, it's below the 23%. So a push through that headwind really will support the S&P moving more towards that. It's 38%. So it's something to bear in mind. But continued resistance at that level could be problematic. And you can also see that that magenta on the MBI is at a critical phase, 2544. Pivot lower there certainly becomes significantly bearish and likelihood of retracing the zero. So this range between the 0.23 becomes very significant if we get pivots at these particular areas. Looking at the euro, nice bounce for the euro because again, this is that expectation that everybody's going to have to flip to easing, though the rhetoric sounds nice. It's just none of it's transpired. So a lot of this is the hope trade. And unfortunately, if those don't materialize, you get a pretty significant fade back into it. And this also bears into question as earnings start coming out. You're seeing banks doing very well with some of the changes in interest rates, but then a lot of other industries not doing so good. And I think that is going to be interesting to see as it's reflected in both housing and some of those other areas that will really start to permeate through. But it's going to take months before that happens. So it's just one of those where, the market trying to be a leader in these areas, you're having conflicting data points. And I think that's relevant. Gold can't catch any real incentive because, again, there's this question of like, well, I don't want to be in gold if everything's going to flip towards the easing. They're going to want to jump back into the market fast. And oil back into the mid 80s, relatively healthy state for that to be in. Excuse me. And this becomes an interesting one with oil caught in this range. It's not great. It's not horrible. Below the 90, helpful, but really need to be below 80 for it to be of uh, any bonus, at least from a growth standpoint. But the longer it remains in this consistent range, the better absorption you get from an economic standpoint. And treasuries still indicating higher rates going forward. They have not bought into this Fed pivot yet because they're actually listening to what the Fed is saying, which is no, it's not. And that's going to continue for some time. And if the treasuries, the reality is for the Fed to actually catch inflation under control, you'd be a long way from where you're at now. So this is that idea that a little bit is going to be enough to, stem the tide. It could end rather quickly if, you had a change in oil policy because lower fuel costs would alter dramatically and or a change in the sanction situation, but clearly that is a political decision that's not taking place. Um, Bitcoin had some nice little strength and support in this, and it's still maintaining quite well. I would say relative to the market, it's at least been steady. I wouldn't call it spectacular in any way, shape, or form. And of course, this is then what I get for my 50K and 5K charts, still waiting for data. This has been a bane of my existence for this short period of time. So we'll just have to leave it with where we're at right there. And again, as I get updated information from the charts, I will certainly update them. But I think this flux back and forth. Right now, we're in a long bias, and so no reason to fear it. Just know that the potential for it to shift very quickly is a real thing, and I'd be looking at positive extremes as we talk about from the intraday charts for those turn signals and where they're going to fill back to, and it becomes rather relevant at that particular stage. As always, though, trade well. We'll talk again later.